Today we are going to study the characters of income and expenditure account. As we all know, income and expenditure account is prepared by a non-trading concern in order to find out the net result of service to the society or to the group of members who constitute such an organization. This income and expenditure account is prepared in order to find out the net result of service of a particular financial year. And how it is prepared, what types of accounts are incorporated, of which year's expenditure and incomes are incorporated, and how it is balanced, and what we do with the balance available in income and expenditure account. And these are the points to be noted under income and expenditure account that we are going to study now. So first of all, income and expenditure account is prepared by a non-trading concern in order to find out the net result of service to the society or to the members of such an organization. So, as income and expenditure account is prepared in order to find out the net result of service to the members or net result of trading of particular organization, this account bears nominal character, because the principle of nominal account is debit all expenses and losses, and credit all incomes and gains. Therefore, income and expenditure account is prepared in order to find out the net result of that particular non-trading concern. So, this income and expenditure account is prepared by a non-trading concern, and why it is prepared, it is written in order to find out the net result of trading. The net result of service of a particular financial year. That net result may be either surplus or deficit. As income and expenditure account is prepared to find out the net result of service, the character of this income and expenditure account is nominal. So, all expenses and losses will be written on the debit side of income and expenditure account. All incomes and gains will be written on the credit side of income and expenditure account. So when credit side is higher than the debit side, the balancing figure will come on the debit side, and the same is known as surplus. Likewise, if debit side, all expenses and losses, the aggregate of all expenses and losses is higher than the aggregate of all incomes and gains, the balancing figure will come on the credit side of income and expenditure account, that is known as deficit. So this account is prepared in order to find out the net result of service of a non-trading concern in a particular financial year. That will be either surplus if credit side is higher than the debit side, and that will be either deficit if debit side is higher than the credit side. Surplus and deficit will be transferred. This surplus amount or deficit amount, as the case may be, will be transferred to the capital fund on the liability side of the balance sheet. That means the surplus or deficit will not be taken away or will not be taken away by or suffered by or credited by the members of such an organization. So whatever be the net result, that net result will be transferred to capital fund to be shown on the liability side of the balance sheet. If the net result of trading, if the net result of that particular non-trading concern is surplus, then that amount will be added to capital fund to be shown on the liability side of the balance sheet. If the result of such non-trading concern is deficit, then the balancing figure will be deducted from the capital fund to be shown on the liability side of the balance sheet. So the result of trading, the result of service is either surplus or deficit, and the same will be transferred to capital fund account. Then, as told earlier, all expenses and losses will be debited to income and expenditure account. All incomes and gains will be credited to income and expenditure. Therefore, one thing to be noted is that all payments and all receipts will not be shown in income and expenditure account. Income and expenditure account shows only actual expenditure of that particular financial year and actual income of particular financial year. That does not mean actual receipts of cash and actual payments of cash. And next is, while debiting expenditures and losses, the payment belonging to the current year's expenses, is increased by the outstanding amount to be paid during the current year's outstanding expenses. Actual payment of current year plus actual payment of current year's expenses plus any amount outstanding to the current year will be added to. So from the total expenses paid, for example, if electricity charges is paid, the electricity charges, the total amount paid during the current year will not be shown on the debit side of income and expenditure account. That is on the expenditure side. But the amount of current year's expenditure with regard to electricity charges will only be shown. That means it excludes all expenses belonging to previous years, and if there is any advance payment, that amount will be deducted. So previous year's payments as well as paid in advance will be deducted from actual payment made. And if there is any amount due but not paid for the current year, will be added to that particular expense, and the net result is expenditure with regard to electricity charges, the income received during the year. From the income received, we add income accrued but not received. From the income received, we add income accrued but not received. Accrued amount will be shown. Likewise, income received in advance during the previous year will also be added to. And from that we deduct, that is, income received of the previous year during the current year, and income received of the coming years during the current year. So only the current year's actual income will be shown on the credit side of the income and expenditure account. So these adjustments with regard to expenditures and incomes will be dealt in detail in the next classes. So all these figures shows the income received during the year, and then we balance, and the balancing figure will be either surplus or deficit, and the same will be either credited to or debited from capital account to be shown on the liability side of the balance sheet. And the method of preparing income and expenditure account is on accrual basis, because not the actual receipt or actual payments is recorded. We adjust outstanding figures and accrued figures, prepaid figures. All these will be added to or adjusted to a particular expense account or particular income account, and then it is balanced. So it is prepared by non-trading concerns. It is to find out surplus or deficit. This account bears nominal character because it is prepared for finding out the surplus or the deficit. All expenses and losses will be debited after making due adjustments. All incomes and gains will be credited after making all adjustments. Current year's expenditure or income is shown, and this deficit or surplus will be added to or deducted from income and from capital account, capital fund account to be shown on the liability side of the balance sheet, and it is prepared on mercantile basis, that is accrual basis. That means apart from actual amount received, we adjust all the prepaid items, all the accrued items, all outstanding items, all received in advance. All these are the main points to be known from income and expenditure account. Thank you.